All right, guys, bang, bang. We're back. Meltem's here. She was the original off-the-chain guest, the very first one in August of 2018. She was so bad that we've kept her off the podcast for a year and a half.
Hey, I'm in the room, Pomp.
But she is here, and we got a whole bunch of stuff to talk about, some crypto stuff, some not.
We basically already did the podcast.
Yeah, we've been talking for 45 minutes. Polina's in the room making fun of me. Joe's over. He's got a new pair of headphones. He's ready to go. So,
those look nice, Joe.
We got a whole studio set up now. Go to YouTube. I can't say it enough. Go to YouTube and subscribe. All right, enough shilling.
Never enough. This is Crypto Pomp.
What's been up? A year and a half later, you're at CoinShares now.
CoinShares, yeah.
All right. What do you guys do?
That's a really good question. So,
I only ask hard questions around here.
That's a really difficult question. I don't know if I can explain what my business does. So CoinShares, a lot of people know us as an asset manager, and that's really where our roots started. We have a product line of exchange traded products in the European market under the brand XBT Provider, 700 million in assets under management. So it's a pretty sizable platform. We have 4 products today: a Bitcoin tracker, an Ethereum tracker, Ripple tracker, and a Litecoin tracker. Our most popular product is our Bitcoin tracker. But what a lot of people don't know about CoinShares is we do more than just ETPs and asset management. We are an institutional finance firm in the digital asset space focused on creating products and services to enable investors to access the crypto market.
What does that mean?
What does that mean? Great question. So here's how it breaks down. We have our exchange traded product business, which is focused on creating products and making them accessible to investors. Our products are different from some of the others in the market in that they're created and redeemed on a daily basis. There's no premium on there, and they track the price of the underlying. We also have an advisory business here in the US under our broker-dealer. We also have active strategies where we invest in different assets. I'm particularly focused on the venture side right now, so we do that through fund structures. And then we also have a capital markets business. We internalize a lot of our trading, a lot of our flow, and now we're looking at different ways to offer that to the market. And we also have a sizable lending book. So we do a couple of different things. In the process of doing this over the last 6 years, which is a long time in crypto, we've also built out our own proprietary tech stack. And so what we're looking at right now is different ways to bring the technology we've built to manage all of the various components of our asset management business and our trading business to the market in new ways.
And so what is the biggest part of the business out of all of that? Because you have a bunch of different products, right? But like what is, give us a sense of like what's the biggest and down to the smallest or generally?
Yeah, I think the biggest part of the business, the way we think about it, is at the top, asset management drives everything. Mm-hmm. So we are effectively a customer-facing business, and our customer is an investor who wants to get exposure to digital assets and digital currencies. And then the way that we monetize that throughout the business is not only on the management fees, but also internally on all of the flow that goes through our business. And what we're focused on now, the newer part of the business, is what I'm building here in the US, which is all of the other products and services that people want as they start delving into the proverbial Bitcoin rabbit hole. As people get down that learning curve, they start to want, exposure to direct investing, exposure to more sophisticated strategies, more actively managed strategies. And so that's what we've been focused on over the last year or so. Takes a lot of time. We're regulated in 7 jurisdictions, which is a lot to manage. And as you can probably relate to being an investor, being an asset manager, there's a lot of work that goes into building the right structure, the right legal footprint, the right regulatory footprint, and really building a robust infrastructure that can support all of that activity.
Since we talked, you went in front of Congress, a bunch of politicians. You kind of did your rounds in that regulated world. What are the biggest lessons you learned? What are the biggest takeaways?
I think takeaway number one, the most important takeaway, nobody understands the difference between Bitcoin and cryptocurrencies. Anything else. So when I was...
And just sorry to interrupt, but they use Bitcoin to describe everything, is in my experience. Is that accurate with yours?
They used to.
Okay.
So Congress, I have to give a shout out to Andy Bromberg at CoinList. He was like, I was talking to Representative McHenry's office. They're looking for an expert witness. They called me, but I think you're going to do a really good job. So shout out to Andy for making that connection. So I got a call on a Friday afternoon, and I had to submit my testimony like Sunday night, right? So I had 48 hours.
A long time.
Yeah, whatever. It's fine.
I wrote a lot of papers in school about that time frame. That's pretty good.
You're like Wikipedia, copy, paste. So what was actually really interesting about it, and the big point, and I also have to give a shout out to the team at Coin Center. I had a few phone calls with them. Have known Jerry, Robin, that whole team for a while, and I think they're really great at what they do.
Niraj. Give a shout out to the meme master himself.
He is the meme master of crypto, unlike Barstool Sports, which we're going to talk about, which I'm pretty excited about. But what was really interesting is as we were talking about how we wanted to frame the conversation, really what kept coming to my mind is we need to differentiate between Bitcoin and everything else. And we really need to make sure that walking out of that hearing, people understand Bitcoin is unique and there is no other Bitcoin. I think sometimes when people talk about digital currencies, they say, oh, Ripple, it's just like Bitcoin. It's like, no, that's not accurate. And so I think that was an important distinction that was made. But there's a lot of word soup that gets thrown around, and there are a lot of different people in DC trying to influence how policymakers think and how they make decisions. And the way they're describing Bitcoin and other digital currencies, as well as the capabilities of blockchain technology, in a lot of cases are just not reflective of reality.
Is it malicious?
I mean, it's hard to ascribe intention to what other people do. I don't think it's always malicious. I think sometimes it's a matter of incentives. Ripple is actually the largest lobbyist in DC based on amount of funding contributed, which I think is in a way net positive for the industry, right? And Ripple has the balance sheet strength to do that, but their focus is going to be very different. They're going to focus on a very different narrative than, say, someone who's building an open source software product that supports Bitcoin and enables people to self-custody and trade peer-to-peer. Two very different sets of incentives. So I don't think it's malicious, but people are ultimately motivated by incentives. Right?
Makes sense. As part of this, you got to tell us about the shitcoin getting into the congressional record, because I think most people now know that it happened, but like, was that staged? Was that pre-planned?
No. So it's so funny because Congressman Davidson was just in my office 2 weeks ago, and we've been laughing about that for a while now. So the way it happens when you go to testify in Congress is you have 5 minutes to make a statement. You submit your written testimony ahead of time. So if you go to the House Financial Services Committee website for every hearing, they'll list out who the witnesses are. They'll link the video that you can watch on YouTube. And then they'll also have the written testimony that was submitted. You actually also submit over 100 printed copies of your testimony to chambers the day before. So I ended up writing, I think, a 20-page testimony. So there are a lot of boxes that got delivered to the halls of Congress the day before the hearing. And then you have 5 minutes to give a short kind of opening set of remarks. And then you have questioning from members from both sides of the aisle. And they'll typically go majority party first. So the highest ranking Democrat will have 5 minutes to question. Then it'll go to the Republicans, so on and so forth, until nobody has questions. People can use that 5 minutes to ask questions to the witnesses, or they can use the 5 minutes to
say whatever,
pontificate, right? And sometimes people stump and sort of promote their own platform. We saw that a lot in the second hearing they did with Mark Zuckerberg. So it was really interesting. So the whole time in the morning that David Marcus was testifying, Congressman Davidson was sitting there, and he had this like funny kind of smile, smirk on his face. I was like, I don't know what's going on there, but like clearly this person's very amused. And then I'm sitting up there. I do my 5 minutes, fine. I'm getting grilled, some hard questions, great, handling it. And then all of a sudden, he starts down this line of questioning. Right? He says, so in the industry, people talk about Bitcoin and then something that is colloquially referred to as shitcoin. And I'm like, oh, fuck. Uh-oh. And then he goes, Meltem, Ms. Demirors, could you explain for the members what is a shitcoin? And I was like, oh, not going to talk about that. I was like, let me talk about why Bitcoin is different from other cryptocurrencies. It was funny. And I think it was it was a nice way to inject a little bit of humor into what was actually a very serious and I think a very profound discussion, because the potential implications, obviously, of Libra are massive.
Well, while he was doing that, Twitter was going wild, obviously. And I've actually had him on the podcast, and I would say him and Patrick McHenry both, like, they really get it.
They get it, yeah.
And I remember before the hearings, I think it was before the first day, Patrick McHenry went on Squawk Box, and Joe Kernan like threw him just a fastball right down the middle. And
you did a really good job on Joe, by the way. I'm going to give you credit for that one.
I don't think I was the one who like completely turned him. I definitely, I think, encouraged him to keep an open mind, but I think some other people got to him.
Okay.
Because I left one day after recording, and he was like on the edge, and then I came back like a week later, and he was all in. And I don't know who that mystery person that like pushed him.
I think we were on together last summer, and he was all about it.
He was already at that point.
Yeah, he was like all in.
My favorite part about Squawk Box is they're pretty serious. They do their regular journalism and coverage, etc.
They're really funny.
Yeah, but like
they're all funny.
There was a point last year where I started to go on, and as soon as I would walk out there, Joe and Kevin O'Leary or whoever would be there, they'd all be like, "Pomp!" Like they would get excited, like, "Oh, we could talk about this Bitcoin, like this crazy Bitcoin thing."
Like, there's the Bitcoin guy.
And I just remember like. It made sense because the incentives, right? Going back to the whole idea of incentives, like they knew that those clips would go viral because of crypto Twitter, and they were talking about something. And it was also like such a pure industry from there's some people who really believe it and some people who don't believe it at all. Sure. And like, there's pretty much nobody in between. Like nobody's just like, I have no opinion. Like there's very few people who think that about Bitcoin.
It's polar. It's kind of like Tesla.
Yeah.
As someone who's long Tesla, boom, haters. Sorry.
So
Tesla Twitter is like the only thing that kind of comes close to crypto Twitter, but not even close. Crypto Twitter is so crazy and so entertaining. It's amazing.
All right, let's talk about Tesla real quick because there's a lot of people who were short very aggressively, were yelling and screaming, etc.
Sure. Tesla Q, woof. Like,
yeah, it's real. It's real.
Yeah.
And there's legitimate questions that they have that are unanswered. I get the whole thing, but I fundamentally always believe like you can't short one of the greatest innovators of our time, especially
Tony Stark. He's Iron Man.
You see the car. The car is legitimately better than any other EV on the market.
Hold on. Okay, so when people have objections to Tesla, and this is where actually the narrative about value investing versus growth investing comes in, right? And here's what's interesting. So let's start with quick facts. Okay, month of January, right?
Yep.
January 31st, 3 best performing assets in January 2020. Number 1, Tesla, up 53%. Number 2, Beyond Meat, up 33%. And number 3, Bitcoin, up 28%. Boom, boom, boom. Okay. Tesla.
Those three are like nightmares for like half of the finance world.
Right. But this is where, again, it goes back to, so I studied finance in university, and everyone obviously, seminal book, Benjamin Graham, The Value Investor, right? So there's a large part of the world, stock pickers, what they focus on is fundamental value investing, right? So Warren Buffett does, and we can get into his investing legacy because it's like real iffy.
Didn't beat the S&P for the last 10 years, but go ahead.
Well, there's a lot to unpack. There's a lot to unpack there. But here's what I think is really interesting. So on the surface, if you look at Tesla's balance sheet, their cost of capital, revenues, how much they're spending, their indebtedness, on the surface, right? If you look at it through fundamentals lens, EPS, et cetera, all of the metrics people usually look at, doesn't look like a good stock. But here's the thing you have to appreciate. What Tesla represents is a fundamental innovation. Just like you said, when you go on Squawk Box and people run up to you and they're like, Pomp, Bitcoin. People genuinely get excited about Bitcoin. It sparks something in them that is like spiritual in nature.
It's changed their mind. It's a mental shift in how they think about money.
Same thing with a Tesla. Yeah. The first time someone gets in a Tesla, you see it in their eyes. They're like, oh. It's a life-changing experience. And what I think is interesting, nobody ever talks about automakers. Nobody gets excited about GM or Ford or Volvo or Honda. People get really excited about Tesla. Elon Musk is super interesting. He's very entertaining. But more importantly, the whole experience, the whole brand narrative has been beautifully designed and beautifully crafted. And that sells.
Of course.
It sells.
The thing that I keep going back to is, again, you can look at all of the financials. I get that there's a bunch of issues and challenges, et cetera. But at the end of the day, if you are involved in that business and as an employee, an executive, a partner, whatever, there is something about this one individual that bends reality to make it happen.
Okay. And this is actually really important. So early stage investing, last 6 years, reality distortion field. Your job is to create a reality distortion field. It can't be too detached from reality. That's how you get WeWork, right? Way too detached from reality, too far out. But you have to distort people's perception of reality enough that they believe in the magic, because your job is selling magic. It's selling something that seems impractical and infeasible. And through force of this reality distortion field, you create around the product, the business, making it become real.
But you're not wrong on anything you just said. But the one caveat is take WeWork. Jeff Lewis from Bedrock said this on Twitter, and I thought it was just really, really kind of interesting and very kind of forward-looking. He said, we all knew what WeWork was doing. The difference is that we thought he could pull it off. And what he was highlighting was like the difference between them actually pulling that off and getting into the public markets and probably being okay and having the meltdown that they had was maybe the difference of 4 weeks.
But I think what it boils down to is the reality distortion field was too strong. There were a few decisions that were made a few weeks prior to the S1 getting filed that pushed the distortion too far.
That's what he was saying. He's like basically there's a 4 week window that if they had gotten out 4 weeks before those things happened, we probably are talking about WeWork as just another public stock and nobody ever. But this is Adam Newman's still running the company.
But this is why I think early stage investing and even later stage investing is so interesting, because there is this intangible quality, right? You can look at a business, you can look at the total addressable market, you can do really quantitative analysis, right? You can look at all of the fundamentals, you can look at recurring revenue, run rates, everything. You can break down margin, cost of customer acquisition, all of the things you could look at, right? You could break down the business on a spreadsheet in an infinite number of ways. And I've done a lot of M&A work, so I know all of the tabs you could create in that spreadsheet. But at the end of the day, there's something you can never capture on a spreadsheet. There's something you can never capture in any financial analysis, and that is this intangible, like magical quality that captures the zeitgeist of a moment, and Tesla captures that zeitgeist. Everyone wants Tony Stark to be real.
Fact. But it's the same thing with Tesla or SpaceX as well, right? Like in the private markets, it's been valued much higher than any other business on a multiple basis because they can do something that no one else had ever done.
I mean, a reusable rocket's brilliant. But also the branding around SpaceX, right? The rocket is metallic. It looks like the rocket emoji.
Yeah.
It's pretty amazing.
Absolutely. All right, let's get back to crypto stuff because we could talk about Tesla outperforming everyone else's stocks for a long time. That's right. You all have worse performing than Tesla in January. Central bank digital currencies.
Woof. The other thing, though, that I think is really interesting, right? I want to talk for a second about value investing versus growth investing.
Okay.
Just for a second. Okay. So there's this entire universe whose incentive, right? All of these people in the financial world whose entire incentive is to justify getting paid 2% or 2 and 20 to pick stocks, right? They're priding themselves in like, I have this amazing capability to analyze based on fundamentals, right? And this is our world of value investors. Now, here's the issue. If you're investing based on fundamentals, you would have missed Amazon. You would have missed Apple. You would have missed all of the companies that have delivered 98% of S&P 500 market growth over the last 20 years. You would have missed it because it wouldn't have fit into your view of the world. Yeah. And I think what people forget is in the universe of stocks you can invest in, over the last 20 years, there are only a small handful of stocks, actually primarily Apple. Apple's dividends over the last 10 years, $700 billion, are greater than the combined market cap of 490 companies in the S&P 500.
It's crazy.
So I think, again, people don't look rationally at the world of value investing because they're incentivized. That's how they get paid. That's the model that's been the predominant model in the world of asset management. And then you look at growth investing. Growth investing is a crapshoot in certain ways because how do you build a quantitative model to understand how people capture magic and how they effectively bend reality?
So Amazon, my favorite, and I use this usually to talk about Bitcoin's volatility, but Amazon, since it went public for 20 years, it has drawn down at least double digits every single year. The average intra-year drawdown is over 30%. And I believe that it's drew down 90+% twice. And so my partner Mark Yusko always jokes, he's like, who's held Amazon stock since the IPO? Like Jeff, his mom, and his dad.
Yeah.
Because that's just too much volatility for most people to wrap their heads around.
But also Amazon, after they IPO'd, right, they went up in price, crash happened, 95% loss, right? 7 years to recover. IBM, by the way, took 17 years over that same period of time. So I think what a lot of people don't appreciate, and we could talk a lot about bubbles, but what a lot of people don't appreciate is a big part of investing is timing, right? Same thing with people who bought Bitcoin at the start of 2018. Yep. Everything in life is about timing, and then it's about conviction. And I think the difference here is we're making a secular bet. I'm not making a cyclical bet. I've lived through 3 crypto market cycles. I'm going to live through hopefully many more. But I think the bet you have to take is a secular bet.
The whole idea of picking something that is small before a lot of people understand it or believe it or are invested in it and being right and it grows into something very large is as old as time, right? People have done this with certain stocks. They've done it in the private markets. They've done it with Bitcoin. They've done it with all this kind of stuff. I think the part that people forget is in that from small to large, you need volatility, right? The volatility is what provides that upside, but it's not a straight line. And so it's easy to look back and say, you know, go out the 10-year or 20-year chart on Amazon and be like,
the exact chart I have on Amazon.
Oh, it went up so high. Look at it.
The 20-year chart on Amazon is like almost a parabolic curve.
It looks like startup projections.
Exactly. And then if you zoom in on those 7 years, it just looks like shit.
Yeah, of course. And same thing. Look, you can zoom in on 2 or 3 years of Bitcoin at certain times, right? Same thing.
Here's the one thing I will say about Bitcoin, though. So here's the interesting thing. And we can talk a little bit about investing in altcoins, because I know this is something you like talking about. So here's what I think is so interesting about Bitcoin is you zoom out and it looks pretty good, right? Like most people got into Bitcoin 2013, 2014. So if you're looking at an average entry price of around $200 to $250, we're now sitting at around $10,000, let's say. That's pretty healthy. But the thing that's interesting is Bitcoin's not a company. Bitcoin is 3 things. It's technology in the form of the protocol, it's a network, and it's the entire ecosystem of value creation that gets built on top of it, which gets internalized in the form of transaction fees that flow back to the network and its participants. And so I think what's really interesting about Bitcoin is people have this limited kind of view. You see this today on Tesla Twitter, right? People are like, oh, it's at 750. It's not going to go up anymore. Time to sell. No, that's not how things like this work, right? The thing is, if Bitcoin does 1/10 of what you and I think we're aligned on this, what you and I think it will do, then the upside is massive.
Of course. It's the idea that humans are emotional. Humans have very strong recency bias. And so the idea that a Tesla stock was $200 and now it's at $700, how could it possibly keep going up? Well, actually, the math probability is that it's like the law of motion, right? Things in motion stay in motion. Companies usually are like that. So if you see a company that's executing and driving revenue and growing, et cetera, it's more likely to stay in motion than it is to crash, right? And I think Bitcoin's a great example of this, networks, all this stuff. But that just goes against everything we know as humans, because it's like, how could it possibly go up more than 5x, right? How could it go up anymore?
I think the other thing is people are conditioned much more by their negative experiences than their positive experiences. And I suffer from this myself, right? Like I have to force myself on a regular basis to train my own emotional state because there are a lot of ups and downs to navigate in this market. But I do think that people remember all of the bad experiences they've had. Particularly, I think a lot of people entered this market at a bad time. And the issue is, they were buying maybe Ripple at $3, or maybe their friend told them about Telegram and their family office bought, big allocation in the Telegram token sale. Which not to say that that won't be, at the end of the day, something worthwhile investing in, but it's not really a great experience right now, right? It's 2 years in, they're like, not feeling really good. So I think there is this component of people being conditioned by negative experiences and forgetting that this has happened before so many times and it's going to continue to happen again.
So not only were people buying, right? If you remember, it was like November 2017, Coinbase was signing up 100,000 people a day, right? So a bunch of people pouring in near the top or at the top. But also a lot of funds got started in the second half of 2017. So they were out raising capital, and they were actually raising like like pretty material amounts of capital at that point. So either people were buying directly or going into the funds. The funds had liquid lockups, et cetera. Have you seen, one of the things that I was looking at was like the high watermarks and causing a lot of funds to shut down.
Yeah.
I've seen a couple, but actually I haven't seen as many as I thought I would see. Like there's still most funds, they've either raised other capital, so that's not subject to those high water marks, or they've been able to do something in order to kind of stay alive. What are you seeing there?
Yeah, I think for a lot of funds, just generally, right, the fund industry is predicated on 2 and 20. You live on the 2, you pray for the 20. So what's keeping funds alive is that 2% management fee, and some of them may have accelerated fees, particularly if they're sub-scale, sub-100 million funds. And so I think what you're seeing is a lot of people who raise at that time, maybe they have a $100 million fund, maybe it's a little bit larger in size. So they've been getting their 2% management fee. The other thing that funds have been doing is doing illiquid investments. So we saw a lot of funds that combined investing in liquid assets with investing in illiquid venture bets. And then they were side pocketing that into a separate side vehicle that wasn't subject to the rules of the fund's liquidity profile, the 2 to 3 year profile. And so I think what they've done is effectively created 2 pools of capital, one pool of capital that can be redeemed and is subject to the normal terms of the fund, and then a second pool of capital that's much more longer term permanent capital. And what's interesting is people have now found a way to make token investments, venture investments through these things called SAFs or agreement for future tokens. And so I think, again, we're starting to see this blending where people have realized the reason people like venture funds and the reason people like permanent capital is your bet on like an innovative new technology is not going to play out in 2 years. It's not going to play out in 5 years. It's probably not even going to play out in 10 years because the arc of time is extremely long. And what I always think about is how many miracles do I need, or how many exogenous variables am I dependent on? Those things outside of my control and outside of my system. And there's a lot here.
Of course.
All it takes is a few things going the right way, or conversely, right, to your point about WeWork, a few things going the wrong way that make all of the difference between a zero and a hero.
So that brings me to take Bitcoin, for example. What are the most likely reasons why it could fail?
Bitcoin, I think honestly, the biggest systemic risk to Bitcoin right now is the centralization of Bitcoin and taking Bitcoin and shoving it into the existing banking system. And what I've always been concerned about, and I think what we're starting to see with the rhetoric around Iran and Bitcoin kind of growing, Venezuela and Bitcoin growing, is the segregation of the Bitcoin network into 2 separate networks, one of sort of white listed tokens that are fungible and one of blacklisted tokens that have touched a sanctioned address or an address that's tied to terrorist organization or some other sort of axis of evil type of entity. And that creates kind of a secondary creates a split in the market. So to me, the biggest issue is number one around privacy and data forensics. But I think we're making progress there, sort of second layer privacy tools, tumblers, mixers, and different ways of obfuscating transaction data and wallet level data. And then I think the second existential risk is really the risk of custody, right? So right now, the predominant model for custody is what we've done with all assets since the dawn of time. You build a giant fort, right? If I'm Julius Caesar and I have all my gold coins, I make my treasury, I take all the coins, I put them in the treasury, and then I have armed guards, guard the treasury. Yep. And that's the model we've had for every asset. That's what we do now, except instead of having an armed fort, we have server racks and secure locations. You know all about this. You used to run data centers, right? You know all about how people do this. And I think the big issue here is when you have Bitcoin, it's in a centralized entity and people start internalizing trades. We're seeing BitGo doing this. Anchorage announced it's doing this. What people are trading, they're no longer settling on chain. They're moving zeros and ones between accounts, right? Yep. You're no longer trading Bitcoin. What you're trading is a Bitcoin depository receipt, and you're removing the very properties that made Bitcoin valuable in the first place. And so I think,
but can it go from the completely decentralized model into those centralized entities and then over time be decentralized again?
But here's the issue, right? Maybe theoretically it can, but here's the issue. Once the government has financial oversight of it, and once they have oversight of Bitcoin and they realize, oh wait, 50% of Bitcoin is in custody by entities controlled by NYDFS and the Fed, basically, what's their incentive to ever do that?
Mm-hmm.
There's zero. So go back to incentives. There's no incentive. And so I think what people don't realize, everyone's like, oh yeah, you're like, I'll just put it in Coinbase custody or like Fidelity custody. And then like when I want it back, I'll just take it out. I'm like, okay, but you're going to realize 5 years from now, the requirements for taking your Bitcoin out of custody are going to be really onerous.
What do you think those will be?
Who knows? But I think the point of attack, like if I wanted to kill Bitcoin and basically stop people from using it in any sort of meaningful way other than a speculative asset, which you can do through synthetic Bitcoin. What I would do is exactly this, right? I would say, hey, if you want to go and claim your Bitcoin, you have to submit a DNA sample. You have to submit all sorts of personal data. You have to wear this location tracker so that we know where you are at all times. You get put on a special list so that when you cross borders, we search you for any hardware wallets. You're going to be subject to all sorts of rules and regulations. You're going to get put on an IRS list. You're probably going to get put on some sort of tracking list by the FBI. I just think that, again, a lot of people are doxing themselves right now, and they're tying all of their personal financial data and their social security number to their ownership of Bitcoin on these regulated platforms. And I just think that that's like, yes, it's convenient, but those who sacrifice freedom for security deserve neither. So that's...
So,
I don't know. That's like a pretty libertarian. Sorry,
right,
it's very libertarian.
So that brings us to the intersection of cryptocurrencies. We'll call them digital currencies because they're not really cryptocurrencies, and government, which is the central bank digital currencies. Yeah. What the hell's going on there? It seems like everyone, that's the new thing, right?
Yeah.
It was like, hey, everyone, let's do enterprise blockchain. Now it's like, hey, everyone, let's do central bank digital currencies.
Yeah, but all the enterprise blockchain companies are now doing central bank digital currency because they're like, we need a use case. Like, we need to raise our Series B. Somebody please give us a use case. Okay, so my view on this is you started with Bitcoin, which had a small addressable market, and it was sort of a fringe group of people who were interested in it. Then you got Ethereum, which brought in a lot of the VCs and brought in a lot of the developer crowd. Then you got the next wave of ICOs, which brought in the speculative traders, but also the sort of the rest of the investing crowd, right? The retail speculative crowd. And then you got stable coins, which brought in a whole new crowd, like Wall Street types were like, oh, I'm going to build the leading platform for digital tokenized whatever. And then now we're at this final kind of big boss stage, which is government saying, hey, we're going to use all of the narratives of all these people before us, and we're going to make this thing innovation technology. But really, it's not fundamentally that different from the way currencies managed today. And so I think central bank digital currencies are part of a long sort of story arc around cryptocurrencies to digital assets. And it's completely on the other side of the spectrum from Bitcoin. Like the two could not be further apart. So they're polar opposites.
For sure. And so my whole issue here has been it makes sense for the incentives of a government to want to create a digital currency. It's really about access more than anything, right? So right now I go to the worst case scenario. So I'm a Venezuelan. My currency is being devalued away. I actually want dollars because I trust the U.S. government. I know it's going to be more stable than pretty much anything else. I can't get access because I don't have a bank account. If I get dollars into my bank account, it could get seized, taken, taxed, etc. And the black market is actually pretty dangerous in terms of me getting dollars.
And it's also expensive. Your black market dollars are like 6 times market.
Yeah.
Right?
So like I could get dollars in some cases, but it's expensive or it's dangerous.
Sure.
And so now all of a sudden there's this idea of if I have an internet connection and I don't need a bank account, I can get access to a quote unquote digital currency. Right now, those digital currencies are all what we think of cryptocurrencies that are listed on like, CoinMarketCap or something.
Sure.
But if, let's say, China is able to go ahead and digitize their currency before the U.S., now all of a sudden I can actually get exposure to the Chinese currency before the U.S.'s currency. And it's literally just because the U.S. dollar is not digitized versus the Chinese currency.
Okay, but hold on. This is where I actually disagree with you.
Okay, why?
The medium doesn't change the message. Nobody wants to hold renminbi. Why is the U.S. dollar the world currency?
It's because it's trusted. People trust it.
Okay. So here's where I think with central bank issued digital currencies, what central banks suppose is that if they create this digital currency, and the more important component is actually the payment system and coupling identity to digital wallet. That's actually the big push here in most nations that are implementing this.
For surveillance.
Right? But also being able to actually implement monetary and fiscal policy more effectively. right? Because you no longer have the shadow economy. But at the end of the day, when we think about the reason the dollar is so prevalent in its usage around the world, it's because the medium does not matter as much as the message. So even if I had access to digital renminbi or digital reals or digital, euros, what I really want is US dollars, because what has liquidity and what has trust and what I can exchange with anyone for anything is a US dollar.
So I don't disagree with you that that's what people want, but if they don't have access, then they will start to use these other currencies. And if the US is far enough behind, because remember the GUSD, USDC, like all of these regulated dollar-backed stablecoins, they're not going to go screw around with the sanctioned countries, right? They're built in a way where they won't go into the sanctioned countries. And so...
But no, that doesn't work. It doesn't work that way.
What do you mean?
The way it works is if you have dollars, right? Let's say I have $1 million and I go to Circle and I want to create CUSD, right? I give them my $1 million and they give me $1 million worth of CUSD tokens. That transaction right there is KYC, AML, OFAC rule compliant. But once I have my CUSD, there is nothing that prevents me from interacting with anyone who has a compatible wallet to trade CUSD with them.
So I don't know about Circles, but I think GUSD, Gemini's, they can freeze.
It's a whitelisted? Okay.
I think that they can freeze. And I wish that we could bring something onto it to all the details, but they have some ability which people got all worked up about.
Tether, right? Tether's the perfect example. Tether is built on the Omni Relay protocol, so it leverages the security of the Bitcoin network. And now they have it on Ether and Tron, basically every blockchain network. So again, the only point at which you can really effectively apply regulation is at the entry point and at the exit point. And at the end of the day, what we saw, right, everyone's concerned about the underlying collateralization of Tether and whether the dollar reserves are actually there. Turns out nobody cares. Like people on crypto Twitter care and it's sensational and like, oh, whatever. But when it comes to people who are functionally using Tether to fulfill this very purpose,
could care less.
Nobody cares. Because at the end of the day, Tether is a tether, is a US dollar. And so people are willing to accept it as tender. So when we go to central bank digital currencies, though, I think there's 3 things we have to focus on. I just wrote a blog post on this today. The first is, for most countries, introducing a central bank digital currency is about reducing dollar dependence and reducing the economy's dependence on US policy. So take, for example, a country like Cambodia, right? Which is the case study I used here. Cambodia's economy is based on the dollar. 84% of transactions in Cambodia, 84% are done in dollars.
Okay.
Nobody really uses the real. Turkey, where I'm from, 54% of bank deposits are held in US dollars, not lira.
54% are held in US dollars. Okay.
Are held in US dollars. So again, what that means is all of a sudden, the economy becomes highly susceptible to US monetary policy. So what's interesting is most of these central bank issued digital currencies, in my view, are an attempt to minimize dependence on the dollar. The second component that really matters is current account balances. So one of the important metrics for an economy to track is its current account, right? And the current account is trade, the balance of trade, so exports minus imports, income from abroad and transfers abroad. So if your net account, your current account, is negative, you're a net borrower from the world. And if it's positive, you're a creditor, you're a lender to the world. And so what I think is really interesting here is a lot of countries who want to create a digital currency have large net negative account balances that are a large percentage of their GDP. And the idea here is that you can start to actually impact trade policies, which are driven by managing your exchange rate through this new tool you have. And you can also start to control payments, right? So typically it starts internal to the country, then you open up your flows external to the country. And so now that you have a way to manage flows in and out through this blockchain-based payment system, which you control, all of a sudden you have much more ability to control that balance. And then the last thing, which I think is the most important, it's data gathering and controls, right? And we've seen this without blockchains as well. The last thing I'll add here is one of the interesting trends we've had over the last 50 years, really since Bretton Woods, almost 70 years, oh my God. The US has been a hegemon politically, economically, and also from military perspective, right? The US's power has been unparalleled. We're now living in an age where the world's looking a little different. we're finally in a prolonged trade war with China, which has been a long time coming. Russia has also started to play. Russia has aligned itself with Iran and other countries who are energy exporters. Russia recently announced, Rosneft, which is the largest oil company in Russia, announced that it's no longer going to be denominating any of its contracts in dollars, which I think is an important trend. As we look at the balance of power in the world, I think another thing central banks have started to realize is that a great way to reduce U.S. influence and the ability for the U.S. to be a hegemon is to challenge U.S. economic power through the introduction of this new tool.
Well, and part of it, so Russia's a great example because there was a conference last year. Vladimir Putin was on stage and obviously speaking Russian, and it gets translated, but he literally publicly said the U.S. dollar system is super expensive and we are actively trying to figure out a different system.
Yep.
And he wasn't talking about Bitcoin or crypto or any of this stuff, right? But I think a lot of the stuff with China and kind of bilateral
trade. By the way,
trade,
the euro is also expensive because when you have net negative rates, it's like, no, not sure I want to hold that asset.
Yeah, well,
it's a real challenge.
And the whole thing just comes down to the idea that there's a country that has great ambition but understands that there's somebody else out there who holds a lot of power over them.
Yep.
And so one of the ways to weaken that power is to move off of the U.S. dollar system. And I also think that their identification of this, like it's something they've always known, but the U.S. has actually been like a good parent, right? To some degree of like, they didn't really like go spank the kids. And so it was always like the threat of like, hey, I could put you in timeout or I will spank you. But then all of a sudden we started to really weaponize the dollar. And the second that we like actually started spanking the kids or putting them in timeout, now everyone like, whoa, hold on a second. I'm not playing this game anymore.
Yeah.
And so they see other countries that are, whether there's North Korea, Iran, Venezuela, et cetera, like they see these countries being crippled by the power that the U.S. has. And they say, look, it's just a matter of time before they come for me, right? And so all of a sudden it's like, hey, let me break off of this system. And it's almost like the U.S.'s power, and maybe not the abuse of our power, but the enforcement of the power has accelerated the desires of others to get out of the system.
And I think what's interesting here, I want to make 2 points. One is, as you start playing out this chess game in your mind, it doesn't take much to see where the game is headed, right? We have all of these countries who are going to digitize their currency and try to use these digital payment rails and digital wallets to expand their reach, to gather data on people and to get more granularity and more access to actually implementing policy at the wallet level, the account level. So this is a really, really scary trend. And at the end of the day, when you have all of these countries competing with one another to be the dominant currency, you now have companies who are entering that race because I think social networks are now more powerful than most governments. I mean,
more users, more influence.
Facebook, 3 billion users. WeChat, 1.4 billion users, right? Digital social networks are becoming payment networks. Social networks, social media companies, technology companies are going to be the banks of the future. We just don't.
Well, look, Apple, like there's surveys that show that people trust Apple, Google, Facebook way more than they trust their banks. And
totally.
Yeah.
And then, so what's going to happen is you have central banks issuing digital currencies, companies issuing digital currencies, people, right? How long is it until the next Jim Jones emerges and issues his own digital currency? Or we have, the next sort of cult leader, who knows? And so in this world where there are all of these different competing currencies, what we're actually highlighting is why Bitcoin's so important.
I'm laughing because there's already some of those cult leaders out there, some would argue, who have issued their own digital currencies, but we won't go there.
So the second trend, right? So all of this, in my view, like all of this central bank digital currency stuff, all it's doing is speeding up the adoption curve for Bitcoin. Yeah, because it's the only neutral player here.
This was my whole argument behind, I think it was Q3 last year. I went on CNBC and I'd spent 2 days in Washington. I went and met with, Congressman and stuff. And I walked away and and we'll get to kind of your thoughts as to some of these things. But I walked away and I was just like, this is such a different culture and way of doing business than both the Wall Street world in, New York and also the tech world in San Francisco, that it was like pretty disheartening, but also at the same time, like it just shook me. Like I was like, whoa, this is way different.
Well, so DC, New York's about money. San Francisco is about social currency and like controlling the narrative. And DC is about power. Like if you're into power, you eventually end up in DC. And DC is about what I think is interesting is there's this view in certain members of our government who believe that if they want, they can snap their fingers and will turn off Bitcoin. They have no idea how technology, like zero concept of how technology works. And what I think is really interesting, I think I mentioned this to you, is the average age of a U.S. congressman or woman is, I think, around 70, right? I think it's maybe 72.
Very representative of the American population.
Okay, but hold on. Okay. Nobody is going to go to Washington in the future and ask for permission.
Of course.
And what's interesting is the government assumes, like the U.S. government takes for granted its unchecked power, and it assumes that it will always be relevant to the conversation. And I think for the first time, they now have to compete for that right. But that's my goal, at least.
Part of this though is we've done this to ourselves, right? So what I mean by that is there's no term limits, right? So that's kind of strike one. Strike two is things like I've always thought if you get elected to an office, we should go look at who your largest donor was, and you're not allowed to regulate that industry. So if
Sure.
Big Pharma puts you in, you can't make laws and regulations around Big Pharma, right? You know, if
by the way, it goes that way. It's like I can't make political campaign contributions to someone and then get business I'm barred from doing business with them for the 2 years.
For whatever. Yep.
Yeah.
I completely agree.
So it should go the other way.
And then, also things like you shouldn't be able to make a law and then go get a job that help people navigate that law, etc.
I wonder if you're referring to someone specific there.
You guys can pontificate all you want. There's all these issues, right? But ultimately what it comes down to, though, is like the rules are in place and we continue to elect these people.
Of course.
And I actually didn't believe this before, but now I'm starting to understand. It's not because they are good at what they do. It's because they understand the game. It's like if you're a startup entrepreneur and you've never worked in a big corporation, there's corporate politics game that you never understand. You'll get eaten alive because you don't understand the game. Same thing in the politics world where somebody said to me—
Crypto, by the way, has its own game also.
For sure.
Yeah.
Absolutely. But it's just— the people are actually better at the process than they are at getting results, right? And some of it is they don't want to get results in certain situations because that keeps them in office.
Oh, look, I think what I think is interesting, right, is we're in an election year right now.
Who's going to win?
It doesn't matter. Okay.
That's a cop-out answer.
No. And here's why. They're all the same.
That's true. Okay.
It's same, but different. Okay. Democrat, Republican, don't care who you are, what you say.
Well, Donald Trump used to be a Democrat and now ran as a Republican, and Mike Bloomberg used to be a Republican, I believe, and now is running a Democrat.
Well, look, in the U.S., right, people like to believe that there are differences between the two political parties. There aren't. They're one and the same. What I always go back to, like the world we're living in now, what I think is so terrifying, everyone who's into crypto, I presume, loves Ayn Rand. So Ayn Rand in The Fountainhead, there's a great speech called Francesco's Money Speech, where this character, Francesco, talks about, the way that man escaped the jungle is through capitalism, through the promise of enterprise, like lifting yourself up out of this cycle of poverty through enterprise and making money. And we celebrate money in our society, and we celebrate people accruing money because it's a sign of, like, it encourages people to innovate. It's what drives people to do and accomplish and achieve. And when you get to a point where people who do nothing start to demand that they have the right to take money from people who have amassed it, that's when the system starts to break down. And you look at the rhetoric in DC right now, both sides of the aisle, that's the rhetoric. Everyone wants a bigger share of what's being produced, and what we get for it is nothing, because the amount of grift and insider dealing that goes on is preposterous. The only two areas in our economy where there's inflation is education and healthcare. It's the only two areas.
Yeah, but it shouldn't be surprising to us, right? So two things that I tweeted recently that I fundamentally believe. One was around Bezos just hit $120 billion in net worth. Everyone's freaking out about it. And I said, look, by the way,
my favorite is that Bezos made a Ray Dalio in 15 minutes.
Amazing.
So savage.
If you confiscate all $120 billion from Bezos, right? However you do that, whether it's through taxes or legit, like just give us your money, we have guns, right? That doesn't solve any of our problems. because it's not a money problem in many cases. It's a systematic issue. And so like confiscating money isn't going to solve it, because what you would be doing in that case is you'd be taking money from one of the greatest capital allocators in history and giving it to one of the most inefficient capital allocators in history.
Hold on. But it's not about doing anything with the money. This is about, again, like DC is about power.
Oh, agreed.
It's about the fact that I can go to you and threaten this and that you respond to that, right? It's about control. And again, I think a lot of the problems we have are really complicated, complex problems that have their roots in a lot of different issues. Bitcoin is not a panacea. Blockchains are not a panacea. There is no magic bullet that solves these problems, right? All we can do is try to understand the causes of these problems, look at the facts of the situation, and try to use both public policy and, by the way, competition in private markets to try to improve how we handle these issues. That's it.
My other favorite is I've never seen a politician pledge to give away 99% of their wealth. There's quite a few rich people who have done that in the giving pledge. I've never seen a politician say, I'll give away majority of my wealth. Instead, what they say is, I'll give away a majority of yours.
Exactly. And that's easy to do.
Of course.
And that's easy to do when all you're responding to is trying to get a byline into Fox News. But look, I think at the end of the day, what I'm excited about, for the first time, right, we have more women in Congress than ever, right? We have more age diversity in Congress than ever. We have more diversity just across the spectrum in Congress than ever before.
It has gotten better, would you say?
It has gotten, definitely gotten better.
Like in terms of we're on the right trajectory in terms of diversity, et cetera, or you disagree with that?
But I think when people talk about diversity, right, it's diversity of perspective and diversity of skill set. It used to be only wealthy people were in the ruling class, right? For eons and eons, that's how society was governed, was wealthy elites who controlled the money, controlled the power, also made the rules, and that worked, right? Then, well, it didn't work. It worked for those people, right? And they had the money and the guns and all the fun things. Then we started to get into the era of career politicians and political dynasties. And again, it was still, you came from the moneyed class. And like, if you came from a wealthy, well-to-do family, you were a member of parliament in the UK. And then in the US, though, we did that is people from wealthy established families ran for office and they became senators and so on and so forth. Now what we're seeing for the first time is the democratization of politics. And what I think is so interesting, Donald Trump's a divisive person, obviously in a lot of ways. One thing that Donald Trump has proven to me, I think it's very unlikely that we will have a career politician as president ever again.
You know who I think is going to win president one day and people get real mad at me?
Who?
The Rock.
Oh, Dwayne The Rock Johnson is my number one pick for president.
Polina's in the room. She's laughing because she tells everyone that I think The Rock's going to be president one day. And here's my logic. Incredibly charismatic.
So likable.
The most recognized actor globally.
Yeah.
There's a bunch of studies that show physical size has a lot to do with who wins. So when you put him on debate stages, etc. And
the man is broad.
Yeah, he's huge. He's massive, right?
He's like as wide as the store, I think.
Like, yeah, and here's the best part is Trump won. Like Scott Adams has dissected this to the point of like the dude's just an expert at it at this point.
And Scott's great. Yeah.
But he basically says he's got this weapons grade persuasion, and what Trump was able to do was every time you backed him into a corner, he was able to use humor or attacks to finagle his way out, make people kind of chuckle and move on. Right.
The other thing Trump did is he was upfront about the fact that he was an asshole.
Yeah, of course. If you just own it, there's a bunch of other people who say, you know what, I'd be one too if I was a billionaire, right? Like that whole mentality. Yep. But imagine Trump and The Rock on stage in a debate, and Trump says something to Dwayne Johnson, like a jab at him, and Dwayne Johnson just goes, shut your candy ass up. and you could just see like it's over. Like it's just done because he's more physically intimidating. He's actually probably more reasonable. Like he's a very rational person. He comes off.
He's very likable also. Yeah. I think he's a very likable person. Look, I don't disagree with you there. I am like somewhat excited and somewhat intimidated by that era. I think the other big shift that needs to happen, and this is a shift that needs to happen broadly, which would be interesting to see how it gets navigated, is a lot of people don't realize the roots of Silicon Valley stem in needs of government, right? So a lot of Pardon?
I said, of course.
Yeah,
DARPA
of course,
and all that stuff. Yeah,
exactly. Right. MIT, where I went to grad school, biggest donors, funders of research at MIT, DARPA and DOE. Right. And so there's a really strong tie between our government and innovation. Amazon's about to become the largest contractor to the US government, right, for cloud compute services. Look at that. And so in my
No wonder they want to take all of his money.
Impossible. By the way, Jeff Bezos, Warren Buffett, and Mark Zuckerberg, between the three of them, have more wealth than 50% of Americans. It's like an interesting statistic, right? But
you also, wait, hold on a second. You don't believe that anyone over the age of 55 should vote. What's up with that?
Okay. I said this in the pre-show podcast.
And you thought that you hope that I forgot?
Podcast. Okay, here's my view, right? Okay, so here we are. We are living right now in the year 2020, and about 30% of the labor force is set to retire in the next 10 years. Pensions are underfunded by an average of 25%, meaning they only have 75% of the liabilities that they need to meet. And then
and they're underperforming what they need to keep growing.
Yeah, because their growth rate was 7%, which is like, okay, that sounds unfeasible. Thanks. Very, very good. And the way they invest, by the way, which is super low risk, doesn't work. Preservation of principle is not going to save you. Yep. And so what I think is really interesting, right? We have all these people retiring. And what's concerning to me is people who have time and money in this country are people who are retired, right? So they turn up disproportionately to vote. They drive the vote. And also all of the people who are in office are of that older generation, of that mindset.
On average, yep.
Yeah. And I think mindset's the really important component here. Like they share the same mental model. They share the same influences that shaped their thinking, right? And how they view the world. And so you have these people who are the large donors of all the money because they have all the assets, right? And then you have all these people who are in an office who are of that same generation, of that same mindset. And they're making rules and policies. I'm in my mid-30s, right? I'm going to have to spend the next 30 years of my life working and paying taxes to cover the healthcare shortfall, the social security shortfall, the pension shortfall, all of these things that this population is going to need. I should get to decide who makes decisions for me. I should get to decide because I'm going to be liable for those decisions, not these people who are retired and who are going to be enjoying the last 20, 30 years. I should get to decide because I'm going to be the person who's liable for producing the assets to make up that shortfall. My money is the money that gets devalued. My future is being sold to finance the present for a generation of people who have already benefited a lot from this system.
So what you're talking about was very well highlighted. I saw a chart recently that showed the average age of Fortune 500 CEOs. And basically, for the last 15 years, it has continued to increase. And immediately people said, that's not because all of a sudden we started like moving up the age. It's because the same people have been running the Fortune 500 companies for the last 15 years. And so they started when they were 45, then when they were 50, 55, 60, et cetera. And it's just, they all just kept moving around in between the different companies. But there was one kind of cohort of people who have continued to run the largest corporations in America. The same exact thing in politics, right? Chuck Schumer is a great example. He's been in politics for I don't know how long, but it's not 2 years.
Same, but different. And by the way that politicians make their money, which like, look, everyone has to make a living. And I don't knock people for this. It's knowing the game. But the game for politicians like Bernie Sanders, right? He didn't make his money by having a job.
Multi-millionaire. He's a multi-millionaire.
He made his money through consulting contracts, through speaking arrangements. Like, again, same, but different. There is very little difference between politicians, people who run corporations, and people who run large investment firms. It's like the same set of incentives, the same set of goals, and it's the same group of people.
I don't care what you personally, who you think should win in terms of like your politics, but looking at it from a rational seat, who do you think gets the Democratic nomination?
That's a really good question. I think Bernie probably will.
You think so? You think this is the time he gets it?
I don't know, but I feel like a lot of people right now, like rising wealth inequality, growth of 1099 gig worker, like that whole economy. I think there is enough anger around wealth inequality that someone like Bernie will get the nomination.
I think he's got a better shot than he's ever had.
Who do you think's going to get it? It also doesn't matter because Trump's going to win, I think.
Yeah, I don't even think it's gonna be close. I thought for like 2 seconds that it would be interesting to see Mike Bloomberg versus Trump, and then Trump absolutely So here's my whole thing with politics today, and this isn't a Trump thing; it's just in general. And I'll pick somebody from each side of the aisle that's very good at it. So Trump on the Republican side, AOC on the Democratic side, she's fantastic at this as well.
Yeah,
they understand that it's not about the message; it's all about the delivery.
Yeah,
right. And so Trump beat Bloomberg the second he tweeted out Mini Mike. It was over.
Which also, by the way, goes back to what we were just talking about. Career politicians, done. This is about, and by the way, tying it all back to Bitcoin, this is Bitcoin's strength. Bitcoin isn't just an asset, right? How many people actually wake up every morning and are excited about a stock or a bond?
Nope.
Or the FX they trade or the commodity they trade? Like literally nobody, right?
Except for Tesla.
And even that, I think, is just, money's free. And so when you have free money, you have to dump it into something. So like fake meat, great. Like Tesla, great. They're stocks.
But Bitcoin, what you're getting at is the idea of Bitcoin is the separation of state and money. And
where I want to go is it's a social movement. Bitcoin, more than anything else, is a social movement. It is a set of ideals. It's an identity. Same thing with politics. The people who are going to win political elections are people who move and inspire and create emotion. Right. And the way you create emotion in the world we live in is by having a really strong message that resonates with people.
Okay.
Trump's message resonates with people. I don't agree with all of it, but it definitely resonates with a large percentage of the population in this country. Same thing with Bitcoin. Bitcoin's message resonates with millennials.
Yeah, we're saying the same thing. I always just throw it in the bucket of separation of state and money because that social movement, that's basically like the end result, right?
Yeah.
But what you're saying is the movement there, like almost the process is really, really important. Before we go deep down the rabbit hole of politics, I have other questions.
And by the way, my views on politics are not that informed. I just think it's very interesting that in America, people believe there are two different political parties. I'm like, they're saying the same.
Yeah. And the reason why Polina always actually she doesn't even laugh. She gets mad at me for talking about politics all the time. But
well, you're not from America too, right? Yeah.
No, Polina's from Bulgaria.
So you're Bulgarian. I'm Turkish.
All of Europe is corrupt, just like America. Newsflash, every government is corrupt. But my point in saying all this is I look at the political stuff through the lens of like the marketing and the messaging, and it's fascinating to me to see. And again, that's why I go like Trump and AOC literally are the same person in that they understand how to deliver a message through certain
and their
mediums.
Primary channel is Twitter.
Of course.
Which I think is really interesting.
Because, though, they get to speak directly to people. They completely have cut out the middlemen of the journalistic, like mainstream media who they know were twisting their words to fit a narrative. Now, if they can talk directly to the people, you get what happened last night. We're recording this the day after Super Bowl. Trump tweeted after the Super Bowl and said, "Congratulations to the people of Kansas," even though Kansas City is in Missouri. So, like, you get mistakes, but you also get him to talk directly to people.
But here's what's the best about that is Donald Trump literally doesn't care.
No, he deleted the tweet and literally kept going.
It's on brand for him. It's so on brand.
Of course. Of course. He'll just say, the haters are just trying to bring me down, and he'll keep going. That's the whole thing is the idea of having the tough skin, right, is it's something that I think people who grew up in a certain time period where social media was very prevalent, right? These younger people, they're used to having to have tough skin because you're having the conversation out in public. And so like my father couldn't imagine getting attacked on every day like people on crypto Twitter get attacked. He can't fathom that world.
But by the way, this is what's so fun about the crypto community is people judge things on the merit of your ideas in most cases, right? There's like a lot of people out there that are a little cray-cray. But most times you're judged on the merit of your ideas. Like I get called out all the time and then people get to change my mind and I'm like, oh yeah, you're right. Like I was wrong about that. And I think that's the beauty of it. That's the beauty of having social media is you get to have conversations on the internet with strangers.
Yeah. Twitter is the WWE. I've talked about this a million times. It's like there's the villain, the hero, the tag team partners, whatever. Sure. It's the whole thing. Another WWE type entity is Barstool Sports where
by the way, shout out to my partner who works at Barstool Sports. It's his birthday today. So shout out to him. Little love on the podcast if I can, Pomp. If I can co-op your podcast
can we dox him?
No, we
Okay,
cannot.
we can't say his name. All right, that's
he
fine.
literally
People
he
can
said
just
to me,
Google
he
it.
has said to me, Meltem, don't ever tell crypto people who I am. Like, people in the industry know him. And
Yeah.
But he's like, I don't want to go to crypto things. I don't want to talk to the crypto people. And by the way, I feel the same way about the Barstool people. So we both belong to cults.
They're all coming together.
I know.
Listen, in 2021, Barstool and crypto are all going to come together. It's going to happen.
Sure. Well, Barstool's now a gambling company, which is pretty exciting. But look, you and I were talking about this in our pre-podcast, the exclusive pre-podcast that
we should
only
record,
Polina got access to.
We should
super
record
VIP.
the pre-podcast and then just release it. Go ahead.
The pre-podcast.
Yeah.
And then we can do pre-podcast.
No.
And then
now you're sounding like Justin Sun and Trump. All right. So what about Barstool Sports?
Okay. So we're talking about the way that ideas spread.
Mm-hmm.
And I think I joke with my partner all the time. I tell him, you sell memes on the internet.
Fact.
And then you corrected me and you said they make memes first and then they sell the memes.
Mm-hmm.
Right. And so I think there's this interesting thing where we're living in this age where the cultural zeitgeist is really important. Like, look at the rise of TikTok, look at the rise of memes, look at these things that go viral. There's like this ephemeral kind of quality to the way we interact and the way we participate. And what I think is so interesting about Barstool, by the way, one of the biggest, most popular media companies in the world. They're like outranking ESPN. And they're a bunch of jabronis and like misfits from Boston.
Yep.
Who talk about all sorts of weird stuff. If you've ever watched any of their content, like, it's very weird. It's very off color.
Yeah, for those that don't know, I should have done this at the beginning. For those that don't know, Barstool Sports is a media company. Started out in Boston, 2003. The founder, Dave Portnoy, literally was making the free newspapers that you would hand out, and he would sell advertising in them. He discovered the internet, decided, well, I'm tired of making the newspaper, sitting outside handing it out. Why don't I make a blog? Then all of a sudden, it became this Skype video thing.
Yeah, they were doing Skype video calls, which, by the way, on my fourth date, I was forced to watch one, and I was like, I don't understand why we're doing this. What are you?
Well, Dave Portnoy is now worth over $100 million because he recently, so first he sold half the business to Chernin, then he took some more investment, and then the big news was recently they have sold a third of the business to Penn National, which is a publicly traded, very large gambling company, kind of infrastructure company.
Yeah, they own casinos.
And casinos, etc.
And Barstool is basically going to be the sports book in these casinos. And if you think about it, what's really crazy about Barstool, so one of the things you and I were talking about is they decided, so they cover sports, and then they decided to create their own sport. It's called Rough and Rowdy. I have the privilege of watching Rough and Rowdy because my partner manages a lot of the streaming platform and the subscriptions. 25,000 people buy this coverage,
Crazy.
right? It's like 15 to 25 pop, I think. And the numbers go anywhere from 25 to 50,000. They've done like 7 or 8 of them.
It is literally amateur boxing.
It's amateur boxing, but it's so politically incorrect. It's, they had one of their team members who is publicly out as being gay fight someone in Florida, like box against this person, someone who went to jail for like homophobia and like crimes against a gay person, right? So like they pit these people against each other, and it's so off color.
It's like taking the sport of boxing and overlaying it with like what Vince McMahon did with WWF, right?
And then you add in bum fights. I don't know if anyone ever had Comedy Central, like bum fights, but then also adding
that is a throwback.
I liked comedies. I was all in on the weirdness.
So, but what they've done, and they've done a very good job.
And they added in the Man Show. If you remember Adam Carolla's The Man Show, they have the girls and the
So
crazy.
The one thing that Barstool does, I'm going to draw a line here between a number of different things in society that people don't think are connected, but are highly connected.
Okay.
Barstool Sports, Kylie Jenner, The Rock, and TikTok stars.
Okay.
Right, and those 4 are all connected because they do the same exact thing. They build massive, loyal, rabid fan bases for whatever their thing is.
Sure.
And then they turn around and they start advertising where either they are the advertisement or they advertise a product. And then all of a sudden they realize, why am I advertising somebody else's product? I should just sell my own.
Exactly.
And so Barstool's done that very well. Kylie Jenner obviously has done that very well. The Rock is coming out with his tequila.
I also think
TikTok
I'm sitting
stars.
with someone who has done that well.
Pop,
what's the product?
I'm a huge believer in this model. We will see. To be completely honest, I don't know.
Yeah. Well, because it's hard to sell financial products.
Well, one is financial products, but I actually am not even interested in doing that as much as like I think that there's a lot of other things that are much more interesting. And so to me, like the financial products are there's a slippery slope between like legit financial products and then like the latest financial guru type, whatever.
I mean, and we all saw ICOs and the best of the best got pulled into that.
Yeah, and just like that's just I don't know. That's a world like I don't really like and don't want to go there, etc.
Yeah.
Instead, it's I think a lot about in finance. There's a lot of things that haven't been done that have been done in almost every single other industry. So everything from physical products to merchandise to books, events.
Because finance celebrities have historically been, no offense, like crusty white dudes.
Yeah, and they all sell the same thing. What are they selling? They're selling their advice every single time they sell advice.
But also,
or their fund.
Yeah, exactly. But the world of finance, I think, has changed. Like FinTwit's really fun. Major shout out to, I think, Downtown Josh Brown and Michael Batnick, who are both Brits Holt. They do a great job in sort of blending viral social media. Howard Lindzen built StockTwits.
We can't give Howard Lindzen any credit.
Why?
Because he's going to listen to this and then his ego is going to get even bigger.
I love you, Howard. Okay, Howard, you have to buy me a drink next time you're in New York. But don't buy Pomp a drink.
He's done a fantastic job as well.
Yeah. But I think there are people who've started to eat away at this. But I think this is what's really exciting. This is where it comes back full circle. So we've seen a lot of innovation. So the internet drove a massive amount of innovation. And the way it drove innovation is it made creating, distributing product really easy, right? So the cost of bringing a product to market, whether it's an app or some sort of service, went down drastically as we started to see things like infrastructure as a service, right, through cloud. We started to see software as a service, so you could now have access to MongoDB, and then you had marketing as a service with things like MailChimp. Then you had APIs that connected all of these different things to social media and all of these other services. And all of a sudden, the cost of building an audience is virtually zero, right? You built an audience basically with zero investment, just through
time.
Yeah, time. Yeah. Exactly. And so what we've seen in that arena, we're starting to see now, in my view, like what blockchains are doing, what the Bitcoin network is going to do is enable this to happen in finance.
Absolutely.
And I think finance is this area of their life that like everyone has such a weird relationship with money. And this is something that's really interesting to me is when you talk to people about money, how much money you make, what you spend your money on, your budget, how you invest, it's a topic that no one likes to talk about.
I'm pulling up a tweet right now. Keep going.
But this is the most important thing in our lives. Like money and the decisions we make around money and the education we have around money is one of the most important things in our lives. And we don't teach it to people, which I think is a huge mistake. But there is such a fundamental like component of money and finance that people need to understand. So we need to, number one, drastically reduce the cost of bringing financial products and services to market, make them look and feel seamless, deliver them through, by the way, this amazing supercomputer that's in our pocket. And then more importantly, we need to make it interesting and fun and socially acceptable for people to talk about money. I don't understand why people aren't talking about it.
So the tweet that I'm trying to pull up.
Bitcoin makes it okay for you to talk about money, by the way, which is like pretty amazing.
Of course. The tweet that I'm trying to pull up right now, which hopefully I can find quickly, is I tweeted the secrets that the rich people don't want you to know. And it was literally
What are the secrets?
I used that very specifically because what I wanted to do was I wanted to highlight the fact that nobody likes to talk about money. Everyone is super nervous of talking about it. And these are like really simple financial advice things. Hold on, let me see if I can find it real quick. Joe, you might have to edit something out for the first time. All this time is taking me to find this damn tweet.
Okay, so I'll just talk while you browse.
Right.
Okay, I'm just going to riff.
Go ahead.
Okay, but I think what's exciting here, and it actually ties back to Bitcoin, right? And it's actually also ties back to politics because all of these things fit together in such a beautiful way. What's really interesting as financial innovation starts to creep into different parts of the stack, as people look at new distribution models that are focused on leveraging the strengths of social media and these other platforms where people are congregating, what starts to happen, like we're already seeing this with Bitcoin, how do you regulate an asset that has no real physical jurisdiction? And so what's going to start to happen is historically finance has been one of the most regulated industries, and for good reason. What we're going to start to see is an evolution of how finance gets regulated, because it's going to be impossible to manage the proliferation of all of the ways in which people are delivering financial services and products. Already we see this.
Of course.
Already we see this. And so my hope is that as this trend continues and accelerates, right, that it'll lead to significant reform, both market structure reform, banking reform, but also financial regulation reform, because there is so much that we need to do better. Like, let's be very clear. People talk all the time about having a registered offering, right? People are like, oh, you know, our ICO is like a Reg D regulated offering. Our ICO is like a Reg A. Like, by the way, that doesn't mean shit. Having expensive lawyers file paperwork for you does not confer quality.
Oh, the lawyers won in the ICO craze. The lawyers, the people who made the most money in all of crypto on average is the lawyers.
And by the way, STOs, not interesting to me.
Why?
Because there's negative selection bias. People who are using STOs to raise money typically are raising money in that manner because they can't raise it in another way. And by the way,
historically, that's true.
Just because, and again, it goes back to investing. Most stocks do not perform well, do not perform at all. Being publicly listed doesn't confer quality on a company, right? There's a small handful of companies that deliver all of stock market return. And so a lot of people are like, oh, if we make the capital structure more innovative and flexible and allow anyone to buy securities, particularly high-risk early-stage securities, it's going to have this amazing boom effect. And it's like, no, most of those investments are still not going to perform well because they're high-risk investments. Doesn't mean people shouldn't make them, but I think people confuse the cause and the effect. And so I do think it's important that, the regulation component doesn't actually do anything other than increase the barrier to entry. That is literally the only impact of regulation, is increasing the barrier to entry.
So my whole thing with a lot of people call them STOs. I think of it more as automated finance, right? And the reason
I say digital securities.
Yeah, the reason why I use automated finance is you need the asset itself to be digitized, but
so it can be programmable.
Kind of. So let me throw something at you and see what you think about this. I don't think I've ever said this publicly. My whole fascination with what's going on outside of Bitcoin is one simple idea. Pre-1400s, there was single entry accounting. And that single entry accounting was basically very narrative driven. So it would say, Meltem gave me 6 chickens. I owe her eggs every day for a year, right? Yeah. And we'd have to literally read the words to understand. It was all Roman numerals were used as well. So it was really hard to do addition, subtraction, etc.
Yeah. Egyptians used strings with knots tied in them, which
all
is
kinds
equally
of stuff.
Confusing.
Yeah, all kinds of stuff. And so in the 1400s, right before the 1400s, basically 2 things happened that were really important. 1, printing press was invented. And 2, we went from Roman numerals to more of Arabic numbers, and those became more popularized. But in the 1400s, there's this guy, Paciolo or something like that, Pacioli, I think if I get it right. He's known as the father of accounting. And what he realized, he was writing a book on mathematics. And when he's writing this book, it was about all kinds of different mathematics, including how art was related to math, all this kind of stuff. And he included a section on something called double entry accounting. And he learned this from some Italian merchants. What the merchants wanted to do was they couldn't figure out what they owed people and who owed them what. So they created 2 entries, debits and credits. And
by the way, this was the start of Venetian merchant banking.
So he saw it, put it in the book. One of the first people to read the book, Leonardo da Vinci, because Leonardo da Vinci was reading while he was painting the Sistine Chapel about the art and math. Yeah. Also happened to read the double entry system. He was well known at the time. He began telling people about it. One of the people he told it, Medici Bank, the Medicis that owned the bank. Yeah. All of a sudden they start getting everyone to use it, and bam, here you go, you're off to the races. So this guy becomes now known as the father of accounting, but at the time, nobody knew it was all Leonardo da Vinci. Well, that one thing in the 1400s today is the foundation for every single transaction that anyone does, right? And so it was, if you think of it as a technology, accounting as technology, it was probably one of the most important technology inventions in a very, very long time.
It allowed for the rapid proliferation of lending.
Absolutely.
And capital as a service.
One of the largest explosions was in the United States with the rise of corporations as businesses investing, all this kind of stuff. So you know that, right? In 1989, there's a Japanese researcher who came up with triple entry accounting. Yep. Nobody cared. 2005, cryptographers said, what about that triple entry accounting and digital receipts? Nobody cared. 2009, first real world application of this triple entry accounting system. All of a sudden, $160 billion asset with Bitcoin. If my theory is correct, triple entry accounting will be the most important invention technology-wise in our lifetime, and no one's talking about it.
I think people are talking about it. They just don't use that language.
Yeah, they talk about it as STOs or blockchains or all this other stuff.
To me, so the way I describe it is the flattening of the finance stack.
Okay, what does that mean?
Okay, so basically what that means...
that's something that somebody that went to MIT would say. So what does that mean?
I think it also is like somebody who has booked a trade, right? So typically the way it works, right, there's 3 layers to how transactions work. There's the execution, which is you and I agree to something, we shake hands and we're like, okay, that's the trade. Then there's clearing, which is you and I providing instructions and then our respective compliance departments confirming it, doing KYC, AML. And then there's settlement, which is the actual funds swapping, right? So what's really innovative about blockchains, in my view, and the Bitcoin network is you've collapsed all of that into one single ledger. So instead of those things happening in 3 different layers and in 3 different places with a lot of extra work, you can now do these things more efficiently on a single settlement network, which is why the way what makes stablecoins so interesting is for the first time, instead of having different interoperating networks that don't connect to one another, having to reconcile and do double entry accounting to track what's flowing where and manage it all, you can have all of this stuff happen programmatically on one ledger.
So I don't disagree with you at all. The other framework that I use that I go after the technology folks who don't understand the finance world is if you look at humans, we're all we're all nodes in a network, right? And we used to be very siloed and fragmented. So I couldn't talk to you, you couldn't talk to me unless we wrote a letter to each other that was slow, or we were in physical proximity.
I'm
to
more
each
of
other.
a carrier pigeon girl, but I'm gonna let you.
Polina actually wrote me a love letter one time. Her eyes just lit up like, "Do not tell that." But I'll tell that story another
I don't
time.
think eyes lit up was the. I think she was more like, "What?"
Listen,
what?
I can share a little bit of fake news on the podcast. She has
post
no,
it on the fridge. That's really romantic.
No feedback.
Did you ever do the words on the fridge where you could spell out?
No. She like left me it wasn't a love note, it was instructions. But going back to my story is this idea that humans are all nodes in a network, super fragmented. And all of a sudden we added in connectivity by giving internet, mobile phones, etc.
Sure.
When you connected all of those humans in a network, productivity exploded, right? Okay, now go to the finance world. Everyone's balance sheet is
also creativity
siloed.
Exploded.
Yeah, of course. But then you go to the finance world, all of our balance sheets are siloed. So I have a balance sheet. I can settle that with debits and credits. You can settle yours, but they don't talk to each other. The second that you add triple entry accounting, right, or blockchains, et cetera, into it, now all of a sudden you're connecting balance sheets all around the world through this centralized ledger or third-party ledger. I believe that will lead to a massive explosion in productivity. What we don't know yet is what are the first applications other than Bitcoin that kind of take off with that.
I think the biggest issue there, though, is, again, it goes back to incentives. One of the big challenges is right now your average bank or financial institution, 30 to 40% of the people there work in compliance and work in legal. So they're the people who are doing the clearing and the settling, or what we call mid and back office, right? And so I think the hard part is, and this is, by the way, like I'm working on a big series around fintech, and the 5 areas where I think we'll see disintermediation first, which I think will be fun to talk about. But I think where we're going to see it is in places where there's a lot of resistance to removing those functions. There's a lot of what I call tribal organizational knowledge, because a lot of times when you go into financial institution, God knows I've been around my fair share, anytime you try to change a process, people first use policy, then use regulation, then use compliance, and then this is the way we've always done things, and because this is finance, we're not going to change it. So I think this is where the path dependence thing becomes really interesting. So you made a comment earlier about needing a lot of force to change the trajectory of something, right? And so right now we're on this course where the world of finance is on a certain path, right? And I believe in path determinism, that once something is already on a path and it's in motion, it has velocity, it has acceleration potentially, because the mass keeps growing and growing. And by the way, after the 2008 financial crisis, all of the policy changes that were made that mass continue to grow, right? It's picking up speed because it's getting bigger and clunkier and heavier and uglier and messier. 4 banks in the United States control over 50% of consumer deposits. All right, consolidation is the only thing that's happened. So this is getting bigger and faster, speeding up. So to kick this thing out of its trajectory, which is eventual like massive implosion, you need something with a tremendous amount of force. And the thing that has a tremendous amount of force is something that is so disruptive that it changes everything, and it has to do it kind of in like a one-shot moment. So I think there's all this gradual stuff that will happen that will start to seep into and start building competence within large financial institutions. But like, have you ever watched a bank try to build a website?
No, but I can't imagine that it's very
God,
effective
so bad.
or efficient.
It looks like AOL in 1996,
Yeah,
right? And so I think what's going to happen, and this is where I think the urgency is going to come from, is tech companies are going to become financial institutions. And in a very rapid span of time, banks are going to see all of their market power eroded, all of it.
Yeah.
And so they're going to be forced to do something really drastic, right? It's kind of like what's happening with the central bank narrative. Something's going to happen there that's going to kick off this massive sort of wave. Don't know when it is, but a broken clock only has to be right twice a day.
That's right. All right. Before we switch topics, the tweet, I found it. What rich people don't want you to know.
Okay.
Number 1, you won't get rich off a salary alone. 2, inflation steals your wealth, so invest. 3, buy assets, not liabilities. 4, never spend more than you make. 5, pay yourself first, always. 6, compound interest works wonders. Now, none of those things are groundbreaking ideas. They're very well understood in people who understand finance, etc. The thing about this tweet that shocked me, 1, it went viral. And 2, the number of people that reached out to me and said, I want to change my situation.
Yeah.
And what shocked me was how few people talk about money.
But
it blew me away.
But here's what's really interesting. Even when people do talk about money, go to a bank website, go to an asset manager's website. It's not fun. It's not engaging, right?
Yeah.
It's boring. It's really boring.
Of course, because that's all they know. And they've been scared out of their minds by regulators and compliance.
Oh, I have this conversation with my compliance team every day. It's like, don't tell me no. Tell me how I can do what I want to do. But I do think like there are all of these forces that are coming together to shape what I think will be a really exciting time. I think the last decade was all about SaaS, software as a service. I think this next decade is all about delivering financial services, financial products through digital first experiences and tech companies becoming financial institutions.
That's a great segue. Last topic, but there are actually 2 that are related: zero hedge and coronavirus.
Oh, man.
Let's talk first about coronavirus, then we'll get into the zero hedge nonsense or controversy.
What is left to say about coronavirus?
What I want to know is what is your view on the response that certain entities and organizations have had? So I'll give you 3 of them. Okay. 1 is the Chinese government appears to be taking it very seriously. I've seen a lot of videos where everything from today I saw a drone that was going floor by floor in an apartment building outside and taking the temperature of people so that a human didn't have to get close. Yesterday I saw a photo of police had surrounded a building where somebody had been found with coronavirus. Keep people out. And then they've constructed the 1,000-bed hospital in like 5 days or whatever, right? So like pretty aggressive response. Then you've got U.S. Public or private companies like the airlines who are saying we're canceling all flights, all this kind of stuff. And then the U.S. government today or yesterday, I think, they announced that they're going to actually prevent any Chinese nationals from traveling to the United States.
Oh, I didn't know that happened today. I was expecting that to happen sooner. I'm shocked it took so long.
I think so. All right. So what do you think about those? And I'll confirm that that's true.
Global contagion of every kind is a boon for people who want less cross-pollination immigration. So I think one of the biggest observations around coronavirus is the amount of racist rhetoric that has entered the conversation, which I think is not surprising given the day and age we live in, but I find it deeply disturbing. I think one of the other pieces to understand here is the stark sort of differences in how the U.S. treats things, how China treats things, and just different perspectives around the world. Seeing the speed of the response in China and seeing how seriously they're taking this and how willing they are to go to those lengths, I think is very eye-opening because in the U.S., like we can't do anything effectively. I think you and I in our pre-podcast, which next time we will.
Joe, we should secretly record them. When people come in, oh, Plina just killed that idea. That's how decisions get made around here. I come up with wild ideas, and Joe looks at me like, that's a great idea, and then Plina kills it.
Yeah.
That happens at least 5 times a day. All right, keep going.
Okay. But I think what's really interesting, right, is looking at, for example, that video of how quickly the hospital in Wuhan was built.
Yep.
some of the examples you just highlighted, I think what's really interesting is the way that the Chinese government is using technology to really, really speed up efficiency, and the way they're reacting to this. In the US, if we tried to build a hospital, it would take like a year just to decide that we were going to build the hospital. If the CDC were going to issue any sort of statement, it would take like 6 months to even agree as to what the statement would say. And so I think, again, like there are pros and cons to the situation, but I think in an epidemic situation like this, it's really interesting to see how totalitarian control and the idea of empire and single unified voice that all responds to direct leadership from the top is sometimes more effective than our bipartisan system, where like literally a politician would use this as a way to stomp for some campaign issue, right? Like, well, people are dying. So I think that's just an interesting thing to note. The last thing I saw about coronavirus is all of crypto Twitter went crazy. They're like, oh, like coronavirus drives Bitcoin. And no. You know what drove Bitcoin is a bunch of central bankers getting together in Davos, talking about digital currencies. Literally every hedge fund manager in the world was there, picked up their phones, called people, and they were like, I need Bitcoin.
Did you see the picture of the ECB governors when they got together at dinner? This goes to your point about the regulator's age, right, and all this stuff. There's a photo that Christine Lagarde, I think, shared online, and she's like, me and all the ECB governors, and it's literally 24 people who all easily have to be over the age of 60 years old. They all
I've had dinner with some of them,
white, etc. And when you look at it,
I call it MPS.
What's that?
Male, pale, stale. Maybe that's a little bit offensive, but like the MPS quotient in those conversations tends to be
all right.
high.
So under these directives, non-U.S. citizens who have been in China within 14 days of their planned travel will not be permitted to fly to the United States. That's what it is. So it's not Chinese nationals. It's any non-U.S. citizen who has been in China within 14 days.
Okay. That I think's different. Okay.
Yeah.
So initially, like I was like, oh, that's pretty racist. That actually makes sense to me. So I think the biggest issue here is like stopping contagion. We had the first case of human-to-human transmission of coronavirus on U.S. soil, I think on Thursday. Someone in my office was sick on Thursday. I was like, he was like, I'll come in the afternoon. I was like, stay home. Yeah. Marty Stenson, if you are feeling unwell, go home, stay home.
11 of the 19,700 cases of the new coronavirus are in the U.S. All right, so that brings me to zero
So coronavirus, like, interesting. We'll see how it unfolds. Health pandemics are always scary.
Yep. And we are definitely not equipped to deal with these.
No, but I think this is a new world we live in, right? Which goes back to like hegemony and power. I think the next great frontier is going to be the digital realm, right? Like the biggest area of spend for governments in the future will be cybersecurity. You think about the impact coronavirus has had on mobility. Think for a minute if systems went down.
Yeah. The first 195 Americans that were evacuated from Wuhan, which is the epicenter of the outbreak, are under federal quarantine and will remain at a military base in Southern California until mid-February. The government hasn't issued such a quarantine order in more than 50 years, according to CBS News.
Not surprising, though. I mean, look, global pandemic, terrifying.
All right. So that gets to zero hedge, which I will caveat this entire conversation with, I don't want you and I to get into is zero hedge good or bad, or should they have done what they've done? I think that there's a much larger conversation
But also it's irrelevant.
Yeah, fair point, right?
Our perspectives on zero hedge are irrelevant.
Yeah. There's a bigger conversation around censorship and deplatforming, right? And so what zero hedge essentially did, for those that don't know, they are described as a financial markets blog. Some people would argue that they're more of a highly radical conservative outlet that is sharing everything from like real news to kind of extreme ideas to conspiracy theories, etc.
I would describe zero hedge as a post-apocalyptic finance website.
Yes.
It's like a dystopian post-apocalyptic take on all things finance.
Yep.
Interspersed with like really weird, scammy financial advisors writing articles about really esoteric, really thinly traded stocks.
Absolutely.
Is that a good?
Yeah. So they wrote this article, and the headline was essentially, is this the Chinese scientist who's responsible for coronavirus?
Sure.
And what they said in it, they strung together a whole bunch of what are confirmed facts, but they strung it together in a very controversial way. And what they said is, look, in Wuhan, there's this university. That university has a Wuhan Institute of Virology. And there's this professor. That professor has been studying SARS and coronavirus and how they're carried in bats and other animals and transmitted, et cetera. And they pulled up his profile, the university's description of that work, their past publications, open job applications, et cetera. And then at the end of the article, they said, oh, by the way, if we want to know about the coronavirus, maybe we should go find out from this guy. Here's his email and here's his phone number. So that happened last Wednesday.
Sure.
BuzzFeed said there's a guy, Ryan Broderick, who said, nah, that's not cool. He wrote an article that said, meet the pro-Trump, alt-right or whatever blog that has doxed a Chinese scientist who is inaccurately accused of releasing the coronavirus as like a bioweapon. Well,
the blue checkmark brigade, as I like to call it.
Absolutely. So long story short, Zero Hedge gets banned from Twitter, permanently banned for, according to Twitter, violating their manipulation policy, whatever that ends up being. And so the internet goes to work, and the internet is undefeated in these situations. Literally within an hour, I saw people tweeting about the reporter, his tweets from 2012 and 2013. Yep. And I'm not going to go into the details of them, but they fall into two categories. One, there was some comments in and around pedophilia, which obviously immediately, people get very uncomfortable about and complain about. And then two, and rightfully so. And then two is he also participated in the doxing of a business owner in 2013, basically shared information where people were doxing somebody. Okay. And so as you get into this, it all comes down to Twitter. I wrote this morning that they deplatformed somebody for quote unquote doxing a Chinese scientist, but they only really gave publicly available information in the blog. Sure. But that was reported by a BuzzFeed reporter who previously had doxed somebody else, and some are allowed to say, some are not allowed to say.
But you're using facts, and facts don't matter.
Okay, explain.
Okay.
That's very Trumpian.
No. I'm just being very realistic. Right? Yeah. Facts have never mattered, by the way. A great book to read for people who are interested in this is a book by Bernays. It's called Propaganda, written in the 1930s. Bernays advised the tobacco industry on how to effectively create propaganda. He also, in a less sort of less sort of politically acceptable turn of events, he also advised the Nazi Party on how to effectively implement their propaganda campaign. But it's really interesting because what it's really about is facts are objective and subjective, right? Okay. There's also a great book on how statistics can help you be totally wrong about everything, which is basically how you can manipulate data to basically tell any story you want. But what I think is interesting here is what you're talking about is facts of the situation, right? Yep. At the end of the day, a platform like Twitter, what they're responding to, what is the goal of the Twitter corporation? What is their only function in life as a corporation? To maximize shareholder value. Yeah. Okay. So their obligations to their shareholders. Any sort of negative media event, any sort of negative press event, any event that casts them in a negative light has to be handled and dealt with, right? And this is where deplatforming comes in. And what I think is so interesting, and this is, again, we live in a country, fortunately, where we have freedom of speech. That's a right that's protected by Bill of Rights. And that is a right that, when it's infringed upon, gets taken to the highest court in this country, the Supreme Court, to be deliberated upon. And then these precedents are set that establish people's right to free speech, right? This is why code is considered free speech, by the way, which is amazing thing. What I think is really interesting here is Twitter theoretically is a privately owned corporation. Your access to Twitter is bound by terms of service that are on Twitter's website, right? They're at the bottom of the site, the stuff no one reads. In Twitter's terms of service, they basically get to dictate when and how and where they can remove you from the platform. And the real question here is, does Twitter have any obligation to maintain free speech?
What's your answer?
Well, as someone who invests in companies, right, and as someone who understands how corporations work, my response is Twitter is a privately owned company, and its only obligation is to its management and its shareholders. That's it.
So one correction, I get what you're saying. Publicly traded company, but privately in the sense of it's not a public utility owned by the government, etc.
Exactly, right? And there's a difference between a public utility and there's a difference between privately owned corporation. Twitter, at the end of the day, is privately owned corporation, privately run corporation. And the only people who get to decide what happens to a privately run business and a privately owned business is the people who own it. Mm-hmm. And in this instance, there are majority shareholders who happen to be, some of the executives of the business. And then there are a bunch of other smaller shareholders who really have no voice, who happen to be the stockholders, right? Unless there's an activist investor who's accrued a large share. But at the end of the day, the only obligation of Twitter management is to shareholders. And their only responsibility is maximizing shareholder value. That's historically how firms have worked, right? Now, the other side of this conversation, though, is a more important question, which is, what is the function of Twitter as a platform? Is it a utility that anyone who follows the First Amendment should have access to?
What do you think?
I'm split on the debate. I spent a lot of time talking to Andrew Torba, the CEO and founder of Gab. In fact, we had a great conversation about deplatforming at Crypto Springs in September with Jim Patterson, the CEO of Ease, the marijuana delivery company, and Cindy Gallup, who runs a social media sex platform called Make Love Not Porn, where people upload user-generated porn, basically. And we talked a lot about deplatforming. Andrew's response, he's built a platform that basically enforces the First Amendment, right? So it protects people's right to free speech. And the terms of service are, if you do anything that violates the Constitution, then we will remove you from the platform. But otherwise, we're going to protect free speech. And he's been deplatformed from every service as a result, because a lot of the people that gravitate towards the platform are people who've been deplatformed on both sides of the aisle. Mm-hmm. So he implemented Mastodon to decentralize the network and its infrastructure so that he doesn't run all of the servers. Anyone can run a server in the network. So if his servers go down because his infrastructure provider stops servicing him, which happens to people all the time, network won't go down. He's used Bitcoin for the payment side of things to allow people to pay for their memberships. He's built his own mailing infrastructure. So I think there's that approach. But the hard part is Twitter is where the volume is, right? Mm-hmm. If this were a market, Twitter is where the liquidity is, where the clicks are, it's where the likes are. So I think the big question here is, it's the same question we have with Facebook, right? 3 billion users on the Facebook platform. It's the biggest social media utility in the world. Does Facebook have an obligation to anyone other than its shareholders?
Well, basically, it's the same argument of like, could the telephone company refuse giving you telephone service if it doesn't like what you're talking about on the phone?
Well, with the repealing of net neutrality, the answer is yes. But this has always been the question, right? Is what is the line between private enterprise and public utility? Mm-hmm. And this is part of the challenge when you have such a large percentage of the population on networks that are owned by private companies, right? Same thing with, let's talk about Jeff Bezos, right? Amazon. We all use Amazon every day, right? What if Amazon decides it doesn't like you and says, Pomp, you can't use Amazon? You have no recourse. Same thing with Uber. Same thing with Google, right? So I think, again, there's a really fundamental question about what happens to these platforms that become so large that they become the utility.
Mm-hmm. But do you think that there's a difference between, quote unquote, deplatforming somebody from services versus from the conversation, from like speech related stuff?
They're the same thing.
You think so?
Yeah, Twitter is a service.
No. What I mean by service is like, if Jeff Bezos says, hey, you can't get your packages delivered through Prime anymore because I don't like you, like you're kicked out of Prime, to me is different than Twitter saying you can no longer be part of the conversation.
How's it different?
You have no speech, because one's speech related and one is not.
Yeah, but there are plenty of social media platforms that you can go to instead of Twitter. Twitter doesn't owe you anything.
Of course. My whole, by the way, I don't actually think that Twitter should be, so two things. One is, I don't think that Twitter wants to be in this situation. Like Jack has been pretty clear, like he doesn't like being in this position. He doesn't want to be in this position. That's why they're working on Blue Sky and decentralization.
Yeah, but this is the age we live in. We live in the age of outrage, right?
Of course.
Okay, so if you look at Polybius, so Polybius was a philosopher who lived in the time of Aristotle. And Polybius observed an interesting pattern in how humans organize themselves, right? And this has been the issue since the dawn of time. Typically, the way we start is there is a monarch, right? Like a strong character who unifies everyone under him or her, but mostly him, unfortunately, throughout history. Maybe we'll change that, Polina. Let's start our own monarchy. Sorry, Pomp.
That's fine.
Are you on board? Okay, so you get the monarch.
I literally have a fucking pillow on my couch right now that says benevolent dictator, and it isn't talking about me.
I love that.
It was a gift, and somehow the gift has persisted.
Okay, so you have someone who unifies everyone. Then leadership passes on to their children, their children's children, and over time, like the strength of that leadership and that lineage fades. And then all of the wealthy merchants start getting angry, right? And they're like, "Wait a minute, why is this person, why is this family taking advantage of the situation? We're the people who actually run the country." So then they put themselves in power, overthrow the monarchy, and then they pass leadership to their children. It becomes an oligarchy, right? And then people get upset about that. The next layer down, overthrow them. They're like, wait a minute, we're the people. We should have the right to representation. Then you have democracy. And then the phase that comes after democracy is something called ochlocracy, which is what I think the world we live in now. It's rule by mob. So it's whoever shouts the loudest is who gets heard. And by the way, Trump and AOC and like everything we've talked about is basically ochlocracy.
Yeah.
And then all of a sudden, like the mobs get so loud, the yelling gets so loud, everyone's fighting with everyone, balkanization on all fronts, everything splinters, and you end up with total anarchy. And then you just repeat the cycle.
Do you think we get to the total anarchy in our lifetime?
I think so. I mean, look, I think that we are at a point, if you look at what's happening around the world, yellow vests in France, Hong Kong, Venezuela, if you look at what's happening in Iran, like we assassinated a world leader.
Who?
The US. Like this
who?
Is pretty crazy.
Who did we assassinate?
And Iranian general. Right?
Oh,
if you
man.
look at
all right, hold on. We got to go here. So here's my whole thing on this situation.
Wait, hold on. Let me finish this.
Okay, go ahead.
Okay. So if we look around the world at what's happening, right? Even the election of Trump, right? I think increasingly what we're seeing is people no longer respond to logic or fact. They respond to how they feel. Social media and the way we consume information. Russian faction spent $100,000 on Facebook ads, best ROI per dollar spent ever, because they shaped the narrative of a nation for the next 4 years and probably another 4 years. And so what we're seeing, like the great war that's being fought is the war for our minds, and it's how we feel. And it's how what we believe and what we think, and not based in facts. People are attacking and hijacking our own psychology and using our own brain psychology against us. So in my view, like anarchy is inevitable, because when there are enough factions competing for control over your mind, the ultimate result is chaos.
Do you think that...
Sorry, I sound like a crazy person.
No, you don't. I think that...
Sometimes I look at myself, I'm like, what? Who are you? You used to wear a suit and go to corporate finance sessions and do budgets. And
so I want to talk about Sulemani real quick, because I think it's a perfect example. So Sulemani is an Iranian general. He's basically the second most powerful person in Iran for most intents and purposes. And we killed him.
When you say we, let's be very specific. The United States Armed Services killed him.
Yes.
Yes. The executive branch made the decision.
Yes. And when the United States killed him, I saw a whole bunch of narratives online, but the two most powerful ones, or
and facts don't matter,
that took hold were, one, hey, we just created World War III and we just killed like the vice president of Iran essentially, and game on, this is going to be really bad. The other narrative was we just killed a terrorist, right? And those two, what's crazy, they're both rooted in fact.
Okay, but hold on. But here's the question, right? What provocation was made that resulted in that action?
So I have to caveat with, I spent time in Iraq for a year.
And thank you for your service.
And no, not in that sense, but in the sense of the information that was fed to Americans came from two sources: those that supported the decision and those that didn't. Those that didn't came very harsh in the we just killed this is really bad, I can't believe we made that decision, etc. It is undeniable this was a bad dude, right? Bad dude in the sense of...
I think it's ironic because we made such a big deal out of the MBS Jamal Khashoggi thing, and even though the situation is very different, I think it feels similar in some ways. And I think it goes back to, again, is the function of the U.S., like what my tax dollars are being spent on, while I do believe that protecting human rights and sort of helping maintain peace is an important function, that function really belongs to the United Nations, not the United States exclusively. And what I take concern with is we're living in a world where like the millennial population is massively indebted. We can't meet retirement obligations, right? There's a retirement debt crisis that's coming. And what we're investing in is starting wars we can't ever possibly win, that actually we're winning doesn't mean anything, right? Like if you look at Iraq, like what would winning mean?
Oh, we should have left.
But winning
10 years ago, 20 years ago.
But winning didn't have a meaning, right?
Well,
like,
no, but here's the thing is that we got very, so two things. One, it's very well understood now that the American people were lied to, without a doubt, undeniable, et cetera. And then two is, I mean, literally on the ground. There was days where we're just looking around like, what the fuck are we doing here, right? And part of that was there were certain things that occurred that, looking back, were very positive in the sense of Saddam Hussein being removed, all this kind of stuff. But past a certain point, it went from we are taking out a bad dude to we are now going to rebuild a country. And I don't think that you can fundamentally rebuild a country to begin with, but also that's not the job of the United States.
And this is where it goes back to like, okay.
Makes for a great economy though.
But right. Well, the military-industrial complex and the petrodollar, very strong, my friend. But I think the hard part is this, right? We have decisions being made by people about going to war that are being made by people who have never served in the armed services, whose children have never served in the armed services. And so what I take issue with is we have a country that is running on a massive budget deficit. We are spending trillions of dollars of capital on wars that are really ideological wars more than anything else, right?
Well, because budgets don't matter, because we just print more.
Okay, MMT. I know that's the topic du jour, but when we stop being able to export our inflation through our monetary policy, that's going to change.
Oh, I don't. By the way, I don't think it's good, but that's just the world we live in, right? Where literally the debt doesn't matter. Like it's just keep increasing the ceiling, just keep printing more money, whatever. And it's just accelerating the world that I think you and I both agree we're headed towards.
So the last thing I'll end on, I actually think Epsilon Theory, aka Ben Hunt, captured this really well in a blog he wrote about like there are only really a handful of outcomes here. And based on what a thing happens, it's going to mean very different things for what you should be investing in. He describes three kind of outcomes. One is the zombification of everything, which is basically like a Japan-like situation where everything gets gutted out, like no inflation ever again, no growth ever again, like just zombies.
Yep.
Then there's the Great Jihad, which is where the world like just goes haywire. We have that anarchy situation I talked about, chaos, and then it's guns and Bitcoin and gold. We're like going to chip off little flakes of gold to buy coffee.
I'm from North Carolina. I know a lot of people who've been prepping for that one for a while.
Yeah, look, I'm not endorsing any of these views, by the way. I think it's an interesting way to view the world. And then the last one is we just continue accelerating as is, and there's some sort of great debt snowfall, and then everything gets wiped clean. We start over. I don't know which of these are likely, but I do think one of the things we have to recognize at some point is like, is this sustainable? And I think the answer is fundamentally this is not sustainable. It's not. Yeah. And so the question is like, is it going to happen in my lifetime? I don't know. I think probably, because my lifetime is going to be much longer than the lifetime of the generation before me, right? I think longevity is another area where very interesting to think about in the context of retirement and sort of assets as well. But I think we are on the precipice, like all of these different challenges in our world are compounding into a really dangerous mix. And all of a sudden we're giving people weapons of mass destruction in the form of social media and tools that literally manipulate your mind.
I'm going to end with something that I think a lot about, which is, what's the saying? The pen is mightier than the sword.
Yes.
What we are starting to realize is that a tweet can change the course of history. And we pretty much saw that with the Sulemani stuff. We dropped a bomb, right, or many bombs, and we killed a lot of people, and there was military action. But at the end of the day, Trump's tweets both accelerated the situation in a negative manner, right, causing more conflict. But at the same time, I believe that he probably actually got the Iranians to back off a little bit when he came over the top, kind of like this mob mentality of like, if you do something, then we are going to do something so much worse. And I don't know what that means for the world, but it's something we've never seen before.
Well, wars of mutually assured destruction have been fought before. I mean, this is the whole conflict of the Cold War. It's essentially a massive game of chicken, which is, by the way, the game we're playing with China, which is, by the way, also the game we're playing with Bitcoin, right? At the end of the day, you have to know what game am I playing and what's the end goal, what's the end outcome, and then how do the rules of the game change as I play the game? And do we create
that's
new
a great
games?
tweet. The central banks will blink first.
100%. That's my belief.
All right, where can people find you on the internet? We've talked for almost 2 hours.
Oh,
Where do they find you on the internet?
Twitter primarily.
All right, what's your handle?
At melt_dem.
Okay, what
At
about
Meltem.
CoinShares?
CoinShares Co.
CoinShares.co.
CoinShares CO is our Twitter handle, and then CoinShares.co is our website. We have a lot of great
Who has
research on.
CoinShares.com?
Don't want to talk about it.
Oh, okay.
But we have a lot of great.
Whoever
content.
has it, I'll buy it from you so I can mark it up. Go ahead.
That's happened a lot of times to a lot of businesses. Not going to work. By the way, Handshake launched today, so I'm going to own the CoinShares.co HNS domain. So pretty soon we're going to have immutable domain names.
What about Unstoppable Domains?
I've looked at Unstoppable Domains. I think
have you bought a domain yet?
I have.
Oh, all right. This episode's launching on a Monday. They're the sponsor, so that was a great.
All right,
plug for
Unstoppable Domains, we love you. And I think the last thing I'll end on is please read our research and give us feedback on what you want to see, and let me know what content's interesting. We're always putting out interesting research, interesting analysis. I'm the person who likes to make the charts, so give me a shout. Let's make
long
some charts.
CoinShares, long Bitcoin, long Barstool Sports, long everything that we like here. All right, guys. Thanks so much for listening.